Thank you for staying tuned. Now, despite concerns about the general elections, the stock market segment of Nigerian exchange kicked off this year on a positive, adding 1.08 trillion naira in the market capitalization in January as investors positioned themselves in dividend-paying stocks. The NGX had closed positive in 2022, gaining 5.62 trillion naira to close the year at 27.9 trillion naira as high network investors, most especially pension fund administrators, positioned in listed fundamental stocks despite the sustained positive sentiment recorded at the NGX on the back of improved corporate earnings churned out by local investors. Foreign investors have continued to exit the market due to scarcity of the foreign exchange, double-digit inflation rate, and hike in monetary policy rates, giving room for retail institutional investors to dominate trading. Meanwhile, on international scene, global stock markets experienced widespread profit-taking trend among global equities as investors responded to the latest economic data and company earning releases. Well, joining me live from the United Kingdom to give an analysis of the performance of both local and international markets, he is an investment and financial advisor, Mr. Gbenga Ogunrinola. Thank you so much, Mr. Ogunrinola. It's good to have you join us on the program.
Thank you, Tolu. It's nice to be here again today.
Well, I want to start with the Nigerian market, which seems to be starting the year positive, just like I reeled out in my introduction, despite the fact that we have few days to an election. What are the fundamentals and what do you think is responsible for this development?
All right, thank you, Tolu. It's nice to be here again. So the market has been quite resilient in the last couple of months. Just like you said in your introduction, it's ended the year 2022 on a positive, despite the downturn we saw in a lot of global market institutions. But in our own case, I mean, we had a good return on investments, and the year ended on a positive note. It started also on a positive note, and despite the election, we still see it still moving up in the uptrend, and I think it's a good omen for us in the country. At the same time, when we look at it critically, we'll discover that one of the things that we had seen is because the local investors are the one basically participating in the market currently. Since COVID era, after the end of COVID, we've seen very few foreign investors come into the markets. So it's been a market that has predominantly been mainly the locals, participating in the market. And that has helped us to kind of avoid this dumping syndrome that we normally see anytime there is an election. I mean, the locals are always here. They are not going anywhere. So they would rather hold on to their investments than to dump. So that's what we are seeing. The locals have been the one buying in the market in the last couple of months. And they believe that the economy is still intact and there's no way, I mean, there's no need to dump anything. So that's what we are seeing currently in the market.
But let's look at foreign investors moving away from the market, of course, because of challenge of repatriating funds and all of that. But domestic players seems to be taking charge. What is happening?
All right, so we look at the market critically and we'll see that the return on investments in the market is still reasonably good. Most of the companies that are also operating in the market, they've been coming up with very good results. And so why not invest? I mean, locally, if I mean the industries there are still doing well, the returns on investment is good. I mean, compared with what you have in the developed world, I mean, you don't get the kind of return on investment that you have in Nigeria. So rather than going, I mean, taking money abroad and not getting real value for it, you rather stick to your local market and get the kind of returns that you are getting. So I think that's what we are seeing currently. The market is doing well because the companies that are also listed are not doing badly at all.
So let's see the global space. Take us through happenings around there. A lot is happening in international space, but give us an overview of happenings since we got into the new year, wrapping up the 2022 and getting into the new year. What are the prospects of that market at this time?
All right. So generally, the year started and things are beginning to pick up already. A lot of countries are bothered about the high rates of inflation, and many of them are trying to see what they can do to ensure that the inflations are curtailed. One of the ways they've tried to do that in the past is also trying to raise the interest rates and to ensure that at least there is no capital fund from their markets, leaving the markets. In the UK, for example, the inflation rate, the last figures that we have is about 10.5. And if you look at what the interest rate is, the interest rate is about 4% now, which is actually on the very high side. You look at the stock markets. The stock markets are also doing very well. Generally, the FTSE has gained about 6% this year. The 250 is about 6.4. The 100 is about 5.78% that's gained already this year. If we look back to the Nigeria market, we've also gained about 6% this year. The US market too is doing very well. The inflation rate in the market, for the year so far in the United States, I think it's about 6.5, while the interest rate is about 4.5. The S&P, NASDAQ, Dow Jones, they're all doing well, ranging from 6.5 to 2.6 or thereabouts. Also, the other developed world like France, Germany, the inflation rate, interest rates too, it's on the high. The inflation rate is high, and they are also trying to curtail it. Interest rates is about 2.58 in France. It's about 2.19 in Germany. So they're all trying to balance, the inflation with the interest rates. One of the things that you discover about most of this developed world is that they are giving themselves targets of actually trying to ensure that they reduce the inflation rates by half by the end of this year. For example, the United Kingdom, the Bank of England, had said that the target is to reduce the inflation rate from the current 10% to about 4% by the end of the year. And so you have all other economies to trying to have that same target of reducing the inflation rates, and they are working assiduously towards it. And I think we too in Nigeria, we should also look at that. By the time the new government comes in, which the inflation rate is quite on the high side, the interest rate too is also very high. And what we are just doing is we are trying to just stay afloat. But I think we should begin to really have policies in place that will also be intentional towards really ensuring that the economy is on the road to recovery.
I'm sure you're aware of what is happening in Nigeria at the moment, Naira scarcity. And many will say that this has been done internationally before now, and none of these problems erupted. It was done seamlessly as the old note was able to coexist with the new notes, and seamlessly we signal like what is happening here, even with our digital platforms not being able to meet up with the volume of transactions. Can you tell us what's your reaction to this? Yes, I know it's away from stocks, but generally, what do you think about this?
All right, so I think that the intention of the CBN might be good in the sense that they actually probably are targeting to ensure that those that have stacked money, are one way or the other cut off from the system. But at the end of the day, you need to look at the cost-benefit analysis of what you are doing. What are the repercussions? What is the impact? A lot of people are suffering. A lot of Nigerians, they live on a daily basis. They are daily income earners, and they are the ones that are really suffering the brunt of this. So I think the CBN needs to really come out and tell us what is really happening. Be more open. If you are more open, people will tend to understand with you than trying to hide under certain things and not being open. So if they are more open about what the intentions really are, people could bear with them and say, okay, we'll find ways around it. But when you are not really open and you are trying to maybe just more like you are not straightforward with the people, then there will be suspicion and all that. So I think they need to come out. The day that they gave as the deadline for the naira to come in has ended. The Supreme Court to are giving their own verdicts about that and all that. So I think it also has to do with a lot of politics, at this season. And but I think because of the people that are involved, the masses, the poor people, the CBN needs to really come out and do something very fast before it turns to something else.
Now, so moving on with all of this that we face, I want to ask that what is your outlook for trading? Well, let me say in the first quarter of this year, both locally and internationally. I think sometime last week in the UK, there was a total break, shutdown of activities, train workers and all of that. There was a massive protest somewhere in the United Kingdom. All of this put together, Russia-Ukraine crisis still there on one side, China grappling one way or the other with COVID-19. What is your outlook generally, Mr. Ogunrinola?
All right, so I think all these threats of war, strike, and all that is just it is just a distraction, sort of, to the entire economy situation that people are going through. I know that for most of the developed world, they don't really have the capacity to go for any full-scale war now. Russia is still battling and grappling with the war, and they are spending so much. Modern warfare is so much expensive than many people think. And so for most economies that are still, not balanced on their two legs now, going into real confrontational war now wouldn't really be the best and advisable, because their economies will just collapse. Many of them are battling with economic sustainability now. So they can't really go out for full-scale war. So it's just going to be an issue of, threats here and there and all that. So for the first quarter, I still see the market generally globally closing in a positive. We're already in the second month, halfway through the second month, and most markets are already in the positive. And I see that sustained, towards the end of the quarter, and progressing towards the end, towards the year too. I see most markets picking up beyond what they are currently and ending the year on at least, to be modest, most markets should have a kind of like 20% recovery in their capital markets. And for in terms of inflation, I think many of the markets too are going to see inflation reduced, hoping that, of course, that there's no escalation in the war that we are seeing currently. I want to believe that there shouldn't be and there won't be, hopefully. So if all things being equal, we should see inflation reduced. It might not be the figure that they want it to be, but at least it will go back to the probably one-digit figure that it's always been. And from there, they will try to bring it down further in years to come. So generally, in the UK, for example, we talked about the strike. There's legislations that the government has put in place such that, yes, you can go on strike, but it cannot be beyond a certain period of time. And so that has also helped the economy. In fact, despite the strike that they witnessed last quarter, that's between October and December, you still discover that they were able to escape. The UK was able to escape recession narrowly, last quarter. So the economy was flat despite the strike and all that happened. So I see a situation where, in spite of all the strike and what we have going on globally, we'll still be able to see most economy do well and close the first quarter on a positive note.
It's always interesting talking to you, well-detailed, taking us through markets. Mr. Gbenga Ogunrinola joined us from the United Kingdom. He is an investment and financial advisor. Thank you so much. We'll do reach out to you, of course, when we need more updates across markets.
Thank you very much, Tolu. It's always a pleasure.
All right.